Friday, July 26th, market analysis. Stan Ehrlich, good morning. We have a little bounce in the stock market indexes. We'll talk about most important stuff. Commodity futures, some very brand new signals, 3 of them yesterday, and Bitcoin. So the indexes, the E-mini is near its high and last for the rally for the session and came up to, and it's now slightly above a little resistance area. But there's still more. We're back into a range which we had June 19th through approximately July 2nd. Basically the beginning of it. I don't expect much more strength. We could get over yesterday's high. I don't think it's going to go very far for very long, and I do expect new lows for the trend next week. Not necessarily today, but it wouldn't surprise me. Remember, look how far down we have come. Only in about a week and a half, from 57.20 approximately for the top of the market on the E-mini to 54, almost 20, 54.30. So 300 points down, where we've rallied about 100 now. Yeah, approximately from yesterday's low, 54.30-ish, and 55.25 or so is today's high. Now, I don't see it. I think we came very close to oversold, not quite. So a little bounce is in order, especially after a decline like we just had. But again, looking for lower levels. And I do think the level of 52.70, the lows that we made on May 31st, which is the lowest low since the beginning of May, June, July, and it's going to be August in a moment. So that's quite a significant amount of time. I think we're going to break, at least test, but probably break this low at 52.70. All right. The short-term chart. You can see how much we've dropped down here from the beginning of the break. Boom, 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 and a little bounce. And here we are again with, so far, a little bounce. Next, Spider. Doji, inside day, decent rally, first decent rally basically we've had in a one-day period from close to current quote. Up on the moment, the Spider, and normally this would be a very chunky rally day, 8 points. But when you just finished coming down like 12 a couple of days ago, and then another follow through of a few more the next day yesterday, 8 points is good. Not super great. Maybe 15 or 20 would be super great. And I must mention there's a gap to close, maybe. Gaps are almost always closed. I keep saying they're like black holes in space. They tend to suck the price action back into the gap, which would be allowable, but I would want it to stop at the most getting up to that 553 gap closure price. Next chart is Spider, 5-minute. We're not even above yesterday's high, and that would be one spot I would be looking for it to turn around. And a little bit more than that is the beginning of a little bit more resistance. And then you start to close the gap. Next, Qs. Also gapped down a couple of days ago, have already made new lows for approximately a month and a half. Even a little more than that, frankly, a month and 2/3 probably. So a rally back up toward its gap, and it does have a gap in the QQQ like the Spider, would not be out of the ordinary. In fact, that's a little resistance area pretty accurately. So yeah, that's a possibility, but I'm thinking we may not be able to get that far. But then I'm expecting next week new lows again. So QQQ, short-term 5-minute chart, bouncing up out of a little bit of support that we had for a week or two, and I pointed that out in some other charts. So, okay, fine. And we did get officially oversold in the QQQ for the last 3 days, today included. So oversold conditions close to support or even in a support area on the other chart, the 5-minute chart I drew for you. That's it right there. So yeah, okay. And here is the NASDAQ NQ, and it's oversold for the last 3 days, and it's bouncing some. But we are still short from the high day on July 11th. I've adjusted the stops a couple of different times on the way down, trying to depict what is definitely plausible, possible with the strategy, period. You can loosen them up, you can tighten them up at will, as long as you don't get stopped out in the meantime with, real money. Now, those are my stops, that yellow dotted line and the yellow solid line for an ER1 overnight and an ER3 overnight that got short the day after the signal day right there. Never had a closing loss, maybe a few hours during the day for a day or two, and then everything turned green. Good news. Still in the trade. Same kickers, that's the number I use and name for speeding up and slowing down the movement of the stop, which is not based on new lows solely. It's also based on other kind of momentum indicators. So NASDAQ 1 minute chart, not that big a deal so far. Frankly, it's in a price range right around here that I wouldn't be surprised if it stalled out and turned down. I think I've said that twice in a row now, these last 2 days, right around the point in time where the market did, in fact, stall out and turn down. I make my recordings around 10 o'clock for 20, 25 minutes or so. So anyway, maybe I'll get lucky again. The YM, Dow, the top of the market, great. We did get stopped out. I didn't leave the kicker. I didn't change it yesterday on a sharp rally, and then it pulled back and closed below where we got stopped out. I didn't like that. But, strategies are strategies, and you're not supposed to go messing around with the damn indicators. Your algorithms are, the reason you're using them is because you believe in the track record that they have created, and you expect it to continue. So don't go messing around. You ruin the whole thing if you start changing stuff around, usually, because you're injecting the human being back into the process, and that's the reason why you use algorithms, to get rid of people, greed, fear, all that other stuff. Now, we're out, and thank goodness at the moment, the Dow futures are rallying much better and more so than the other indexes. And remember, the Dow futures did exactly that from around July 10th until the top of the market, which was on the 18th. Other indexes topped out on the 11th, and we're heading south. While on the 11th or the 10th, the Dow was just starting to have a strong rally. Here we are, making new highs for 1, 2, 3, 4 previous days, and today's high is very close to a new high for 5 days. I'm not sure what's going on with the Dow being super strong, don't go down as much as fast, etc. lately, but there's some longer term type of economic change being accomplished. Now, I'm not an economist, so out of my territory here. Next chart is a short-term YM. Nice rally, still not killing any of the signals. It's just rallying a little more than I would have expected. And we're going to the Russell. Now, we did get a sell signal last on Monday. I'm sorry, that's Wednesday of this week. And it came very close to stopping us out. Actually, I think I did yesterday's high, almost exactly. It's stopped us out. But today we have made another higher high, although it's not staying there. Remember, I don't like it when markets make new highs, especially for significant time periods or what could be a double top formation, and close below the previous rally highs. And it's doing that exactly at the moment. That could mean a beginning of a break. No particular exact signal, just that I've seen it happen way too often. So the lower this goes from here, the little bit more bearish I'm getting, signal or no signal. Remember, my signals are sometimes the process of the market topping out or bottoming out, not always the exact high or low day. Next, Russell short term, rally high, awful close, and right in that spot here where they topped out before. They've done it twice today so far. Makes you think. Bond futures. I have an unusual forecast, and that is basically I don't want it to do too much one way or the other for about 2 months. while the other stock market indexes go down and trend lower, the Dow, the NASDAQ, the S&P, and all the affiliates, and hopefully the Russell as well, into the October lows. After, or starting sometime in October, I should say more accurately, I think we're going to start a move up in interest rates across the board and all stock market indexes also. Well, we'll see. I don't make long-term forecasts very often. Here we go. Notes, same commentary completely. Crude had a bullish engulfing yesterday, a brand new buy signal, and we have two others coming up in a moment. Now, it did get a little scary when we got all the way down close to yesterday's low today, but that does not stop us out of the trade. Our initial stop is just below yesterday's low. We did pick up an ER3 right there, 77.17, currently trading 77.44 with a little bit of a profit. You can see the trade line is angled upwards slightly. Good. And so we're on our way with an ER3 long position and ER1 overnight as well. I think the day trade was a very small loss. I'm not sure. But look what happened with natural gas. Today, we're trying to hold to make a double bottom. Now, granted, it's very small. It's only a week and a half in size or so. First leg down was oversold. Good. Second leg down, because of the amount of the decline after a little rally is not that severe, is not quite oversold. That's typical. Even if it made a little bit of new lows, as long as it turned around at around the low of today and turned around, convincingly within next week, making new highs, for example, above 22.314, that would cause the double bottom to kick in and you'd have a nice little objective, something like this, but still no major turnaround. Now, natural gas looks a lot like soybeans, corn, wheat that made new lows for significant periods of time, downside breakout, rally to resistance, and trying to make new lows, which the other grains have done, or the grains have done. So I've got to be bearish, basically, but I do see the possibility of a small double bottom with a small rally as a result that won't change the longer-term picture. Next, heating oil. Yesterday's new long buy signal. This is the second one, crude and heat. Two interesting energy markets. So far, so. Currently trading with a little bit of a loss at the moment on the ER1 overnight and the ER3, which came down to our trigger price right there at 245.29, and we're 244.75 at the moment. So you're trading a little bit below where my strategy is going along. You get the drift. Use what stop you need to, or follow mine. We'll see what happens. I'm probably expecting, I should be expecting 2.574, something like that, and maybe even a test of the high of this last significant rally where we got a sell signal on top, of course. Next, gold. Not much happening with my signals this year. Last year was unbelievably great. Many of them. This year, zip. Not one, actually. Well, yeah, that was in December. That was January 2nd. We have one signal, and it worked. Otherwise, nothing. So I'm hoping we catch up here soon and have a lot of signals. Right now, sideways trading range, came down to the middle of it, popped back up today. I'm not sure what to say here. Kind of waiting for signals or something significant to say. Otherwise, nope, I'm going to pass. But silver and platinum are doing great, and I've predicted the moves in these things now for the last, few weeks. Small head and shoulder top formation, had a minimum downside objective of 29.40, let's call it. It took it 2 days to get down there after the breakout day. That small head and shoulder top only took 8-9 days, I believe, totally to form, and it's perfectly symmetrical. From the shoulder, 1, 2, 3, 4 days to the top, 1, 2, 3, 4 days to the last shoulder. High. That's it. Boom. Crash. Breakout. Small downside objective, 2 days later, fulfilled. But when the small downside objective was fulfilled, you broke below the neckline of the larger head and shoulder top. This is exactly the same thing I can say for platinum, by the way. You'll see it in a moment. So the larger head and shoulder top started on April 12th for the shoulder, a little double top for the head of the formation. Not too unusual to see something like a little double top for shoulders or the head or something, but having a head and shoulder inside a larger one, that's very rare. Head and shoulders are relatively complicated formations. So we're on our way down, supposedly, and we're almost making a new low, and we're going to go down to about, I don't know, 24.11, 24.10, a little above 24 flat. So today's almost a new low for the trend. Yesterday was a big downside move and made new lows for weeks, a couple of months. Doing great. What about platinum? Yay. Same formation. Same combination. Pretty unbelievable, to be honest with you. And we got a sell signal on the exact high day, May 20th. The downside objective on this is 808. So we made a new low for the move today. We are almost to the minimum downside objective based on the small head and shoulder top, which had 8 days, I believe, to the first shoulder of the top, but 9 days from the head of the formation to the last shoulder high. Now, head and shoulders are very symmetrical on the average, but they're rarely perfectly symmetrical, especially big ones. Lots of days between shoulders and head and so on. But this is working great. Minimum downside objective on a small pattern almost reached. It didn't take 3 days. It's taking longer, but c'est la vie. Oop, a little French there. Love the Olympics. So what can I say? I expect to see 808 next. Now, oversold conditions, looks like short covering Friday, bouncing a little. Maybe we'll get back up to approximately, I don't know, 4.3 area, this little resistance level right in here. So then down, about the best I can say for copper. Beans had a buy signal yesterday. I am disappointed. It didn't work. We are already making new lows below the low of the signal day. Period. They don't all work. This could end up being part of a bottom formation of some sort. I kind of doubt it. Remember, the grains basically have been very bearish action on the average for the last few months. This is a huge downside breakout in soybeans. New lows for years. The rally stopped a little slower than I thought it might get up to the resistance area. And at this particular point, I don't have too much faith in any rally whatsoever. Too bad my buy signal didn't work. I was looking for a move back up to 1104, maybe a bit higher. And now, either sideways and then kaboom, lower. I kind of doubt we're going to see another rally, but it's not out of the question. But I'm bearish, very bearish, intermediate to long term. It's trying to figure out this little bump and grind here. What about soybean oil? Well, down day, big time, scooping into the support area. Now approaching another set of new lows below 4180 will do the trick, and we're 4317. If that happens, Katie bar the door. This thing could just simply keep on going south. It's a large formation that will be damaged significantly if we make new lows for a few months. We'll be starting to make new lows for way over a year. And that new low is a new low since 2021. Long-term bearish on soybean oil starting today officially. I thought that there was a good chance, let me fiddle around here for a second, for this market to come up and test these highs. But all of a sudden today, kaboom, nope, that's gone, bearish. Soybean meal hasn't quite reached my downside objective from the little double top formation where we got a sell signal on the high day. So I think resistance is going to stop it if it can quite make, if it May not quite make it there, but we're awful close anyway. And it turned down, break that lows, these lows back here, July 16, reach my minimum downside objective, but I'm afraid it's not going to stop. I think it's going to hit the next support level down here, maybe toy around in there a little bit and bounce a little bit because we might be oversold by the time it gets there. But I'm very bearish, intermediate to long term. Again, it's trying to figure out the bumps and grinds in the meantime, for the most part at the moment. Corn broke out to the downside big time, June 28th. Every bounce, excuse me, so far has been feeble and futile. So the last one showed some signs on Wednesday with a rally high for a couple of weeks, a new one that couldn't go anywhere and started to show lack of momentum yesterday. And boom, today we're lower than the previous 3 days. I think it's going to make another new low again. 41 RSI doesn't give us any help. It's pretty neutral territory. Anything from 40 and 50 and 60, 10 above and below 50, or maybe even 15 above and below is really in the neutral territory for RSI. It doesn't lead you to much conclusions that I think are not particularly reliable at all. As you guys know, I like to use 75 for overbought, not Wells Wilder's 70, and 25 for oversold. That's why I got a little red line there. Yeah, that's the reason. And here's the little green line down there also at 25. And those are the lines that turn my colors yellow for being overbought and oversold. What's going to happen? I think it's going to drop off a lot more. I can't help it. I've been long-term bearish in grains for months and occasionally looking for a rally. So we got a buy signal that worked for a day or a half a day in wheat that has now been completely obliterated, and it's making new lows. These buy signals are not panning out. That tells me there's so much weakness in the market that you have to be looking for just another plunge in wheat and grain in general. Cattle up against resistance, does appear to be stalling out a little bit. High today around yesterday's high, and that's almost exactly the same as a high a few weeks ago. So that's a fairly accurate, significant resistance level. And if you go back all the way to September 22-ish, you'll see a cluster of them all in this same little area. That's why I've got a resistance zone. And I think it might be turning around now. If we close lower than yesterday's low, which does not look likely, I could get a red bearish engulfing sell signal, maybe as profound as this one at the top of the market. The high day back September 19th, 23. Okay. Hogs. No comment. Resistance. Overbought. Small gap to close. I think it's about to turn down. So far today, it's a doji. Next, Bitcoin. Trying to make a new high for the move up here, but starting to run into some resistance levels. I haven't drawn this on the screen. I really should now. Cross that high right there, draw a flat horizontal line, and that's pretty flat. Got through it, but then came back to its support, move all the way up, and got some sell signals on top here. Pretty damn good, actually. Came back down to support only one day below it and then popped back up again. I call that like being pushed, a ping pong ball being pushed underwater. Anyway, the next time down, it broke it solidly. Tested and then went to new lows. Now we're back up to that level again. So we really need to close above the high of, looks like Monday. And that'll keep the market moving up more, I would expect. Quick look at the indexes before we go here. High and last for the E-mini, but that's just a daily chart. Whoops, let me click on that. So we're right up here near yesterday's high. I don't see any particular sign at the moment that this is going to turn down right away immediately, except for that little resistance level, but it's not much. What about our NASDAQ? Still hanging in there, and this is a 1-minute chart, so it just made a little bit more upside progress. But I don't know. Friday, sometimes near the close, some crazy things happen. You guys have a great weekend. Enjoy the Olympics. I'm an ex-college gymnast, so I'm going to enjoy it. Profitable trading to you.